Hello, this is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 4th of March, 2008, and the market's closed. S&P 500 finished with another loss today, down 55 cents or 0.41%. And, once again, the closing numbers didn't tell the whole story, as we had a lot of volatility here. It looked this morning like we were going to have a sharp sell-off, and the market did gap lower, experienced a slight rally, and then continued down. But late in the day, we had some rumors once again of a deal from AMBAC, courtesy of the financial journalist there at CNBC, Charles Gasparino. And that once again panicked the shorts into covering. And I don't think it's really motivating a lot of new longs to get involved in the market, but short sellers, look at this potential deal and figure, hey, why not take some of these nice quick profits we've had over the last few weeks, and that pushes the market higher in absence of selling in there. It just kind of creates a little bit of a vacuum. So the market got that, did drop down to the level that we've been watching and below that 132 level, and was unable to hold there because of, once again, more rumors. And there's really, nothing changes obviously with these rumors, but the market has gotten a little bit oversold here, and still, I'm hoping for a bounce, maybe if it can continue, maybe to be stopped up near that declining 5-day moving average. As I said yesterday, that it looks like maybe we're going to get some stabilization. That obviously, on the open, proved not to be the case, and the danger still does remain high. There's nothing bullish about this chart in here. Yesterday I pointed that the short term, then the intermediate term, and typically the longer term moving averages act as resistance on the way down. We do have this prior level of support that was broken that may act as resistance again. And we've got this little trend line here that's been important. So still a lot of reasons to be very careful in here. I got an email today asking me, late in the day, they said that someone was claiming that we had a successful test of the January lows, and did I think that? And one look at this chart, I mean, it's pretty obvious that the January lows are down near 126. We didn't even come close to that. So I still think that that is likely to continue. But the smart, bear markets are tricky. You have to be very quick on the if you're going to be trading the long side rallies, and you have to be quick in your shorts as well. I still continue to say that it's more of a day trader's environment than anything else, and you've got to keep an eye on those daily trends. This morning, as the market gapped lower, it did make a series of higher highs and higher lows for the first hour or so, and then it failed to hold above the daily VWAP in here. That's where we had further pressure. That VWAP acted as resistance a couple times, and then we started to see some volume come into this market as it poked up through that VWAP. The VWAP flattened out, and the volume retreated a little bit, but then the real buying came in, and just a nice little rally here with higher highs and higher lows right up till the end of the day. The market failed to make that higher high, and again, it's at this potential level of resistance where we have just seen some important support break near 133. So still, we're in a bear market. One day's trading does not change that at all. The XLF didn't come down and test these lows either. It came close, but not close enough. I still would prefer that we see these markets pierce down through these lows, the January lows. And whether that occurs on a closing basis or an intraday basis is irrelevant for a turnaround. The bottoms are a process. It's not a one-day event. Just because we might see a test in there doesn't mean that the market will all of a sudden turn and will be in a bull market. I don't think anyone's suggesting that. But the path of least resistance remains lower. The XLF did break again below that 2620 level, and we'd seen that yesterday. I said that late in the day we had seen a higher low develop, but it would need to really get above. Let's go back to this. Get back above this level right here at about 2570. I said if it gets above 2570, then maybe we get a test of that 2620 level. That's where we still have that declining 5-day moving average came down and met this prior level of support as well. So that adds further significance to that level if we're to maybe get a test of it tomorrow. I don't see anything that suggests that it will continue to rally here. We do still see this pattern of lower highs and lower lows. So it's still we're still in a bear market. It's not going to turn. Again, I don't like to trade these financials. They're too there's just too much news on them that you got to really be paying attention to news and outside influences. I'd rather just trade one of the other indices, such as the Russell 2000. The IWM also came down actually and closed below that $68 level for the first time since we've been really kind of monitoring that as an important level of potential support. Now, again, we've got 4 or 5 days of selling in here, and you've still got to be alert for the possibility that the market reverses back higher. If it does, I don't think it really materializes into much of a rally, though. You can see here again late in the day, same thing that we saw these the daily VWAP act as resistance, and then the market rallied back above it and pulled on some volume, pulled back on diminished volume, and then the buyers came back in. And just a very choppy environment overall, but we are in a bear market, so the benefit of the Dow continues to go to the sellers here as this prior level of support here from the 22nd near about 68 and a quarter. And that was actually 68.20 that we were looking at. 68.20 breaking below there. Now we're right up to that prior level of resistance that may act as support. If the market can continue to rally at all, keep an eye tomorrow on this declining 5-day moving average. A rally up towards that. If it starts finding some resistance in that area, might be a good place to initiate some short sales. But again, this market has not come close to testing these lows yet. 64 in the IWM, and that's that's still 4 points away. So you're looking at still maybe what is that, 6 or 7% further sell-off before you can say that those lows have been tested. And I don't know what it's going to take, but it seems to me that it seems to me inevitable that those lows will be tested. That's the the path of least resistance is lower, and in a bear market, that's what you get is lower highs and lower lows until the market stabilizes enough and then reverses. And there's no signs of reversal. And just basic trend trading says that a trend once established is more likely to continue than it is to reverse. So a lot of people look for bottoms in the market, but there's just no suggestion that there's one anywhere near here. The NASDAQ 100 continues to just kind of grind lower. It actually finished, I shouldn't say that because it finished with a gain of 24 cents today, or about 0.5%. But clearly the path of least resistance is lower. It seems to be finding some closing support, or some opening support rather, near this level. I don't know that opening support really means much of anything. But when we look at the here I've got these lines still drawn on here from the last couple days on the NASDAQ 100, and the this ascending trend line was broken 2 days ago after that fourth test. If you remember, a lot of times the fourth test is what leads to the break. It broke down, continued lower, got down to this this prior low here from the 22nd, and today rallied into the close. So now we've got this market coming up also to a declining 5-day moving average. There's a lot of people that are, I listened to the TV for a little bit today talking about how they expect the market to turn based on whatever they expect it to turn, to turn on. But the bottom line is it takes a lot to turn this market. The path of least resistance continues to be lower, and there just remains a lot of risk for long trades.